It took me 6 long years to become profitable through options trading. I started back in 2016 where I was losing probably about half my trades. I didn't know anything back then, but now I have about a 90% success rate and I'm taking home about 2% per week. Welcome back to Everything Options. My name is Greg, and today I'm going to be sharing you my journey of how I became consistently profitable. So I'm going to give my backstory first, and then I'm going to give you 5 tips for becoming consistently profitable with options trading. But before we get into all that, if you learned anything out of this video, or if you just enjoy it, make sure to show some love, leave a like, and let's get into it. I started trading back in 2016 in an era where day trading was extremely popular. I was trading triple leveraged oil ETFs using UGAs and DGAs that I really had no business in trading whatsoever. I didn't even follow the news on oil, but I was trading the stocks anyway. It didn't make sense. My win rate back then was a 50-50, maybe a coin toss at best, and all of my losers would lose way more than I would make on my winners. So obviously this trading plan wasn't working for me, and I had a lot on my plate already, going to school full-time for computer science and working at a part-time gig at a call center, and I hated that job. And then COVID came around in 2020, so I decided, well, if I hate this job, might as well leave it to pursue trading. Stocks were going down by 30%, and Warren Buffett made all of his riches during recession, so why can't I? Well, he had 80 years of investing under his belt, whereas I had a few years. But it made sense to me. I used to follow options influencers like the Trading Fraternity, and the Money Atom, Tasty Trade's YouTube channel, and this is where I got all my information whenever I first started trading. So I got everything from YouTube videos and Google, so what could possibly go wrong? A lot. In my first 3 months of trading, it was basically like whenever I first started trading back in 2016. Where I had about a 50% success rate and all of my losers would lose a whole lot more. I would basically run those options into zero, lose everything that I put into them, and then I would scalp my profits, maybe making like 10%. So this strategy wasn't working for me either. And then summer 2020 came around and I decided to drop out of college now, even though I was still losing with options trading, and I made a promise to myself if I can make $1,000 per week, I can drop out of school. And by the end of summer 2020, I had made $10,000, so I had succeeded in reaching my goal. But I was getting too cocky back then. I risked $12,000 on a single options trade, betting on Tesla going up by 50% after battery day, and well, that didn't work out so well. So I lost that $12,000 and all of the money that I had made over the summer, and then some. So I ended up having to start back from ground zero, still out of college by the way. And I've learned a lot ever since then. Over the past few months, I've had about a 90% success rate, and I'm making about 2.5% per week now. So obviously, I'm doing a lot better than I was back then, and especially versus whenever I first started trading with a 50% success rate. Which brings me to my tips that I have for you for becoming consistently profitable. Tip number 1 that I have for you is going to be to manage your expectations, especially whenever you're first starting out. The problem that I had in the beginning was I thought that I was going to make 1% per day like the person that I was following. But the difference between me and them is that they had years of experience trading these triple leverage oil ETFs, whereas I had 0 experience with this. And even though I had 0 experience, my confidence was through the roof. I thought that I could make every trade profitable. And this is called the Dunning-Kruger effect, when you have so much confidence starting out with a new skill, and then you realize you know nothing after you start losing some money. But once you've kept at that skill for a long time, you're going to gain experience, and that experience is going to build the confidence back up, and you'll actually gain expertise in whatever you're trying to do. With trading, this is the same way. You're going to have experience under your belt in order to finally become consistently profitable. So if you're just starting out with trading, expect consistency to come over time as you continue to practice the skill of trading. You might not be able to make $1,000 per week like I expected in the beginning. I'm still not making $1,000 per week. But I know eventually I'm going to get there as I continue to develop the skill and build my confidence to where I'm more comfortable putting up that type of risk to make me $1,000 per week. Right now, my goal is just to make 1% per week, and over the past few months, I've been able to more than double that goal with 2.5% per week. So maybe it's time for me to adjust my expectations to set a goal for 2% per week instead of 1% per week, and that is managing expectations. The second tip that I've got for you is to figure out what works for you. Everybody has a different trading style. Some people will prefer to make quick profits through scalping and day trading, whereas I prefer to hold my options over a longer period of time to make a little bit more profit with swing trading. Some people prefer to trade oil. Other people like to trade tech stocks. So you need to figure out what you like. And the great thing about the stock market, and especially with options trading, is you have a ton of variety. I started out trading oil stocks that I really didn't care for at all. I didn't follow the news on oil. So I lost interest in that, but now I'm trading stocks that are in the electric vehicle field, in the semiconductor space, and I like to follow macroeconomics. So the stocks that I follow pretty heavily are SPY, AMD, Nvidia, Tesla, NEO, and things that are in those categories. So I ended up choosing a few sectors that I'm somewhat knowledgeable in, and then I chose a few stocks from those sectors to follow. I've also found that my highest success rate comes from trading spread options, so that's what I stick to. I don't buy regular calls or regular puts because whenever I was doing that, I had a 50% success rate, but whenever I trade spread options, I have about a 90% success rate. So I'm usually trading call credit spreads, put credit spreads, iron condors, iron butterflies. You name the type of spread, I probably trade it. So first figure out what sectors that you actually enjoy following, and then find a strategy that works for you consistently over time. And as long as you stick to what you enjoy and what you're good at, then you should become consistently profitable. The third tip that I've got for you for becoming consistently profitable is to track your progress. This is incredibly important. Now, I use a spreadsheet, and if I didn't have the spreadsheet in order to track my trades, I would have no idea which strategies work best for me. But because of this spreadsheet, I know that credit spreads have a 90% success rate for me. And it doesn't have to be a boring spreadsheet like this one. You can download apps that'll do the same thing for you, even automatically. One solution that I know of is called TraderSync, and this is a trading journal, and I haven't used it personally, so I can't give my experience, but one of my exclusive patrons during our one-on-one meetings told me that she really enjoys it, and she preferred that to using my spreadsheet and having to manually input her trades. Now, the app costs $30 per month, which I wouldn't be willing to pay for, but if you are, then this could be a great solution for you. But by inputting or tracking these trades automatically, you're going to figure out what strategies work best for you. You're going to learn what stocks are better than others for your trading style. And once you have that information, you can use that to hone in on those different strategies or those different stocks and become consistently profitable. Now, the fourth tip that I've got for you is to develop some sort of risk management. Whenever I first started trading, I had no risk management, and that's why I lost $12,000 on that Tesla trade that I talked to you about earlier. Had I employed the same risk management that I have today, I probably would have only lost $300 on this trade instead of $12,000. And everybody is going to approach risk differently. Everybody has a different risk tolerance, but the way that I manage my risk is I start by grading the trade. So I give it an A+, an A, a B plus, or a C. Anything below a C, I'm not going to take on the trade. For an A score or above, I'm going to put down $400 of risk. For a B score or above, I'm going to put down $300 of risk. And finally, for a C score, I'm usually only putting down $100 or $150 of risk for that trade. The way that I see risk is I'd rather start out with how much money I'm willing to lose and put that down as my max risk whenever I open the trade. And if my idea fails, I know exactly how much I'm going to lose. But if I see that my idea is failing before the expiration date, I can always close out of the trade whenever I see that. So I don't always have to take my maximum loss on the trade. And this is the way that I manage risk. Other people prefer to set stop losses or take profits, and this is a perfectly viable way of managing risk. It's not my style, but other people, it works for them. And if it works for you, then stick with it. But if you're finding out that a risk management strategy doesn't work for you, then maybe it's time to work on a new one. And once you've figured out a risk management strategy that works for you, that will help you to become consistently profitable. And finally, my last tip for you is to learn from your mistakes and learn from your successes. If I didn't lose $12,000 from trading Tesla options, then I would have never learned my lesson about risk management. I probably would have scaled up my account to like $30,000 and threw $30,000 on a trade, and risk that much instead of losing $12,000. So I'm glad I ran into that mistake whenever I did, and not whenever my account was a lot larger. And the thing is, you are inevitably going to screw up a trade. You are going to take losses. And it's important that you take lessons from these losses instead of just passing over them and forgetting about them. A good way that you can do this is by using a trading journal. I've actually started journaling recently all of my trades, the idea behind them, the risk that I'm putting down on the trade, the grade that I give it. And then after the trade is over, I can look back on it, see what went wrong, see what went right, and I can learn from my failures and my successes. I know that continuing to journal and taking notes on all of my trades is going to help develop my skill set in trading and defining what I'm good at and what I'm not. And that will help me to become even more consistently profitable. And that's all the tips that I've got for you today. Hopefully you learned something from this video. If you did, show some love, leave a like. Thanks for making it all the way to the end, and thank you to all my patrons for their support. And as always, remember to stay positive, stay green. I'll catch you in the next one. Bye, guys.